Hello, this is Andrew Westhof, Senior Loan Officer and owner of Homes Mortgage Lending. And today I want to talk to you about how appraisal guarantees work. You may have also heard the term appraisal gaps. That's the same thing. An appraisal guarantee or an appraisal gap is guaranteeing an amount above the appraised value, a certain dollar amount, assuming that the appraisal comes in low. These are very common in today's market in my area in Southeast Michigan and really in most parts of the country because the real estate market is so competitive. Oftentimes you need to do an appraisal guarantee to get an offer accepted. So if you're a seller and you have a bunch of offers and everyone's offering, high amounts, but you don't know if the home's going to appraise, having an appraisal guarantee is very enticing to make you want to accept that offer because you're going to get additional money if the appraisal comes in low. So here's the basics of it. And just so you know, appraisal guarantees can be worded differently, but the common way that an appraisal guarantee works is you're just guaranteeing an amount above the appraisal value only if it comes in low. So if an appraisal comes in above, at or above the agreed upon purchase price, the purchase price on the contract, then nothing happens. You don't use the appraisal guarantee. You don't pay anything additional out of pocket. If the appraisal comes in lower than the purchase price by an amount less than the appraisal guarantee or at the appraisal guarantee, that's what you're agreeing to. So you're just covering the difference and moving forward with the purchase. There's no negotiation there. But if the appraisal comes in lower than the purchase price by an amount greater than the appraisal guarantee, you renegotiate starting at you paying the appraisal value plus the appraisal guarantee. And it's a negotiation. So it just depends on what you and the seller are both able to agree on. So for example, if you were making an offer with a $20,000 appraisal guarantee and the appraisal came in $30,000 lower than the purchase price, well, you guaranteed $20,000 above the appraisal. So you'd start the negotiation at the appraisal value plus $20,000, but there's still a $10,000 gap that you and the seller would negotiate based on. So I'll show you in a little more detail how this looks. All of these examples are the same. I did 3 examples with a purchase price of $350,000 with a $20,000 appraisal guarantee at a 10% down payment on a 30-year fix at 4.75% interest rate. That interest rate is about where we're at today. Today's April 4th, 2022 at my company. However, it's not a guarantee of rate or offer of credit. This is just for these examples to be relatively realistic on today's pricing. So first example, the home appraises for $350,000 or more at a $350,000 purchase price. You don't need to use that $20,000 appraisal guarantee. You pay $350,000 for the home at the agreed upon terms and move forward. Now, example 2, the home appraises at $330,000. So this is kind of worst case scenario because it's the maximum amount of the appraisal guarantee. So you're still paying $350,000 for the home, but the lender is going to base the loan on the lower of the appraised value or the purchase price. So the lender is going to use $330,000, and you're going to be required to cover the difference. So you pay 10% down on the $330,000 plus $20,000 for the appraisal guarantee. So 10% of 330 is 33,000, which is 2,000 less than 10% down of 350. So you are paying 20,000 above that 10% down, that 33,000, which is 53,000 total down payment. But you're paying a little bit less because the appraisal came in lower. So you're actually your out of pocket is $18,000 more, not 20,000. So that's kind of a common quick math misconception. You go, okay, the appraisal came in $20,000 lower. We've got a $20,000 appraisal guarantee. We're going to have $20,000 more out of pocket. That's not totally true. Not that it's way less, but it's a few $1,000s lower in this scenario, and that will depend on your down payment percentage. And then a little bit of silver lining because you're paying because you're putting $18,000 more down. Your loan amount's $18,000 less, and your monthly payment's going to go down about $95 in this scenario at this interest rate. And then final scenario, let's say the home appraises at $300,000, $50,000 less than the purchase price. So that's lower than the appraisal guarantee. So at this point, it is a renegotiation, and you're going to start that renegotiation at the appraised value of $300,000 plus the $20,000 appraisal guarantee. So you've already basically told the seller, I'll pay $320,000, but there's still a $30,000 gap. So they could say no. You guys could agree to meet in the middle. They could say yes. It's just a negotiation at that point. Work with your real estate agent and see what they decide to do. We're going to assume best case scenario for this for these buyers and say the sellers decided, yeah, 320,000, we'll move forward with it. We don't want to relist the home and deal with possibly the same situation happening again. We just want to be done with it. So at 320,000, you're paying 10% down on the 300 plus the $20,000 appraisal guarantee. So that's $50,000 total down payment. That's $15,000 more than the down payment at 350. And or a higher appraised value. So $15,000 more out of pocket, plus the $30,000 in price reduction is $45,000 less that you're borrowing. So the monthly payment in this scenario is about $240 lower. So this is actually a pretty good scenario. This is wouldn't necessarily be a bad situation. However, it's the riskier of the three because at that point, the seller can back out if they want to. So a couple of side notes. When you get your loan in process, we're going to assume that the appraisal is going to come in. But most lenders, Homes Mortgage Lending for sure, we can change the down payment amount or percentage after the appraisal comes back. So what that means is if you're have an appraisal guarantee and the appraisal comes in low and now you've got a whole bunch more out of pocket that you weren't planning on, we can lower the down payment if you'd like. For most of my buyers right now, we're actually running numbers based on the appraisal coming in at value and then the appraisal coming in low if my clients have an appraisal guarantee. And many of my clients are kind of planning on, well, if the appraisal comes in low, maybe I switch my 15% down payment to a 10% so that my out-of-pocket's similar. So that's certainly something that you can do. A question that I get commonly, or my real estate agent partners that I work with get commonly is my appraisal going to come in based on this property and comparables? What do you think? They may have an idea, but just know this market's very crazy and it's hard for appraisers to get consistent valuations because of just recent sales, a lot of cash offers, homes being valued higher than what they were and appreciating very quickly. So long story short is it's very hard to guess if the appraisal is going to come in. I've had many clients with appraisal guarantees over the last 6 months, and it's kind of been all over the board. Some have had to use the full appraisal guarantee, some have had to use partial, some have had to use none. So just when you are making your offer, plan to use the entire appraisal guarantee. That way that you know you're good if the appraisal comes in low, and then hope for the best. So I hope this information was helpful. If you have any questions, please ask in the comments below. I'll provide my contact information as well. If you happen to be in Michigan and you want another lender to throw their hat in the ring for your home financing, I'd love to be in that conversation. So feel free to reach out to me directly if you're in the Mitten State. And I will be posting some more videos soon. So if you like the content, please feel free to subscribe. Thank you so much.